Are you thinking about building your own property or looking to get a self-build mortgage? Thank you to Little Doc for this video request. I'll go over some of the basics of a self-build mortgage. I have put in the description below chapters just in case you want to skip ahead to a particular part, but it is advisable to watch the whole video. If you like this content, please consider subscribing. I release new videos every week which could benefit you. Let's get into the video. If we haven't met before, my name is Dan and I'm a CeMAP qualified mortgage and protection advisor. This video is purely for educational purposes only and should not be seen as advice or a recommendation to act. And I must stress, as a mortgage is secured against your home, it could be repossessed if you do not keep up with the mortgage repayments. Firstly, what is a self-build mortgage? A self-build mortgage lets you borrow money to build your own property, as often a regular mortgage you see advertised won't help. So if you've ever wanted to build your own property but not been able to cover the costs, now you might be able to. You might already have lots of ideas about what your new home will look like, where it will be, and the very first step needs to be being able to fund it. Without the money, you won't be able to build your dream home. If you plan to build your own house, you'll need to look for self-build mortgages. As previously mentioned, the majority of deals you'll see advertised can only be used for houses that have already been built. Usually you'll find building societies or smaller banks are more likely to offer a range of self-build mortgages compared to the larger banks within the industry. So how do self-build mortgages work? Self-build mortgages transfer money to you in stages as you build your property. This is very different to buying an existing property, as you'll receive a lump sum to cover the purchase. With a self-build mortgage, lenders like to make sure they're minimising their risk. They also want to see that you're spending the money in the way you planned to, so you don't run out before the property is finished. The majority of self-build mortgages are paid out in stages, so you'll have the money released at specific times. For example, when you want to buy the land, when you're looking to build the foundations, when you're constructing the house's shell, and to finish the internals such as plastering, plumbing and electrical wiring. And then your property is complete and then you get your home valued. Before you do your self-build, you'll need to think about whether you want to do a lot of the work yourself or employ people to do it for you. If you're skilled and you want to do a lot of the work yourself in partnership with plumbers and electricians when needed, this can be the cheaper route. But if you don't work in the trade, you might want to take on the role of managing your surveyor and architect and tradesman. And if you don't want as much involvement as that, you can get a contractor to manage the whole project for you. Your lender will confirm whether you can factor this cost into your self-build mortgage. So when do you get your mortgage to build a house? This depends on what kind of self-build mortgage you're going to get. Some house building loan options offer arrears stage payment. That means that you receive the self-build finance after you've completed each stage. So you'll have to prove at each stage how much it will cost. For this kind of self-build mortgage, you'll need to find a way to pay up front for materials and costs. The other type of mortgage to build a home offers advanced stage payment. This means the money gets released to you by your lender before you need to pay each bill. Either way, you'll need to think about financing your project as early as possible in the process. That will mean you can make the arrangements and budget accurately. How much deposit do you need for a self-build mortgage? If you're applying for a self-build mortgage, lenders usually require a larger deposit from you compared to a typical mortgage within the industry. Self-build mortgages often have a separate limit on how much you can borrow to buy the land and your projected costs for building the house. For example, they might let you borrow 75% of the total cost of the land and 85% of the projected costs for building the house. If you're liking the content so far and you think that others will find this helpful, please press the like button down below. It tells YouTube to show this video to more people. If you're on a mobile, you'll need to rotate it to portrait. What are the rates like on self-build mortgages? Self-build mortgage interest rates and fees will affect how much your mortgage costs overall. They're usually higher on a self-build mortgage than on a typical high street mortgage. It is important to find the best self-build mortgage to suit your needs. One way you can do this is to use a mortgage advisor, such as myself. I created a video on other reasons to use mortgage advisors in this video here. If you do not want to use an advisor, there are plenty of comparison websites on the internet which may get you started, but make sure you use more than one site to ensure you're carrying out thorough research. The comparison websites will cover loan to value, so you know what deposit you'll need along with the interest rates and overall costs. Once you've chosen a lender, you can check your eligibility for that particular lender by contacting them and going through their advice process. If you're struggling to find the right mortgage for you, or it's become a bit daunting, then you can always fall back on a mortgage advisor. What are the benefits of a self-build mortgage? If you're getting a self-build mortgage, you're building your own home, which means you get to tailor it to your needs and circumstances, such as where it's located, what it looks like and how big it is, and its interior features. It's completely unique to you, so you won't end up having an identical property to your neighbour. At time of recording, one of the best things about building your own home and using a self-build mortgage is that you do not have to pay stamp duty on the home. This means you could save thousands of pounds. You don't pay any stamp duty on the building costs or the property's value when it's complete. You just pay stamp duty on the land itself. But as I'm not a tax advisor, I strongly suggest you speak to a qualified advisor to find out the costs you may or may not incur. Another benefit is that your home is likely to be worth a lot more when it's finished than what you've spent on building it and buying the land. I must point out that it has been known due to poor execution and planning for some self-builds to cost more, so please make sure you've carefully planned and budgeted before taking on such a project. How much can I borrow for a self-build mortgage? This will depend on several factors, including your income, your self-build plans, your credit history and your outgoings. Some lenders will lend more than others, and the only way to know for sure is to speak with a mortgage advisor or the lender directly. Make sure you have to hand your proof of income, and if you're self-employed, make sure you filed your latest year's accounts. A self-build mortgage isn't necessarily right for everyone, so you should think about whether you have any other options to fund your new property. Here are a few ideas. If you've got a lot of savings, it could be a good idea to use them as a cost-effective way to build your home. If you've got a lot of money tied up in your current property, you could remortgage to release some of the funds. You could get a personal loan, although this is likely to not cover all of the costs. You could get a loan that's secured against something else you own, like another property. But if you don't make your repayments, you risk losing the asset you've secured the loan against. This could be a helpful way to get some short-term funding to cover your land and building work. This means you could stay in your existing property while the work's done, and when the project's finished, you could then get a residential mortgage to repay the bridging loan. Bridging loans usually have high interest rates, so research this option thoroughly. Other things to consider when taking out a self-build mortgage. Before you go ahead with your self-build, you'll need to plan carefully. Things to consider are: where are you going to live while you build your new home? Will you move in with friends or family, or will you stay in your existing home? Or will you rent? You'll need to consider whether your plan will affect your budget. What build system are you going to use? It will need to comply with the current building regulations, and some lenders don't allow certain types of construction methods. So think about this carefully and consider your options. Your estimated building cost. Lenders will need to know about this, so you want to stick within a specific budget. Others will want costs to be confirmed by a quantity surveyor. It's always an idea to give yourself a bit of a buffer too when budgeting. Other costs, such as fees for construction design, demolition and site preparation, not to forget about planning consent, land purchase fees and project management costs. Whilst this sounds like a lot, as I've mentioned previously, it can be cheaper to build your own home. You just need to be passionate and prepared to put in the time. Please put in the comments below, are you considering on building your own property? Remember, a mortgage is secured against your home. It could be repossessed if you do not keep up with the mortgage repayments. If you feel this video benefited you in any way, please help me out by liking it and letting me know in the comments below. If you're wondering on how you can actually review your credit report without approaching a mortgage advisor and letting them do it for you, watch this video to find out how you can credit search yourself for free. Thank you very much for watching, and I'll see you next week.